The Chinese economy has reached the critical point of secondary transformation if we compare the economy internationally. It is not difficult to find that the contribution of investment capital formation to China's GDP is about twice the global average. That is, since 2008, China's investment contribution rate has remained around 42%, while the global average during the same period is only about 21%. As the return on investment decreases, increasing investment actually means increasing debt. Investment mainly includes manufacturing investment, real estate investment, and infrastructure investment. In 2022, the growth rate of real estate development investment in China has dropped by nearly 10%, and it is estimated to be negative growth in 2023. Although the magnitude of the decline may narrow, this may mean that the long-term upward phase of the real estate industry, which has lasted for more than 20 years, has come to an end. As a counter-cyclical policy tool for stabilizing investment, the overall investment return rate of infrastructure investment is getting lower and lower. For example, the median return on capital of urban investment platform has dropped from 3.1% in 2011 to 1.3% in 2020. The growth of manufacturing investment is also related to the prosperity of exports and real estate, so it is difficult to avoid a long-term downward trend in investment growth rate. Look at the exit again. Since 1990, China's exports have continued to grow and are now the world's largest exporter. Moreover, in 2021, China's exports accounted for over 15% of the world's exports. But since the second half of 2022, exports have also shown a downward trend. The downward trend in export growth is not only due to declining external demand or trade wars, but also mainly due to the increase in domestic labor costs. In 1993, Japan's export share in the world reached 9.55%, and then began to decline. In 2022, it will be less than 3%. Therefore, the decline of Japan's export is not caused by the sharp appreciation of the yen after the Plaza Accord in 1985, but by the sharp rise of Japan's labor remuneration since the end of the 1980s. Therefore, the export share of each country cannot continue to rise, and the rise of the economy will be accompanied by the continuous improvement of labor remuneration. After becoming a high-income country, the cost advantage of exports will also diminish. Nowadays, the salary of Chinese manufacturing labor is about 4 times that of Vietnam and nearly 3 times that of Thailand, making it difficult to prevent the relocation of low-end manufacturing industries. After 2010, textiles, furniture, motors, and telecommunications equipment have become the fastest-growing export categories in Southeast Asian countries. The proportion of China's textile and raw material exports relative to Indonesia, Thailand, Malaysia, Vietnam, the Philippines, and Brazil decreased from 70% in 2013 to 66% in 2019. In fact, the urgency of China's economy facing a second transformation is greater than that of other countries, because getting old before getting rich, while Japan, South Korea, and other developed Western economies used to be getting rich before getting old. In 2022, China's total population experienced negative growth and also entered an accelerated aging stage, with an aging rate faster than that of developed countries. For example, in 2021, the proportion of the population aged 65 and above in China has reached 14.2%. Officially entering a deeply aging society. The proportion of elderly population in Germany reached 14% in 1972, and 36 years later, 2008, it once again exceeded 20%, entering a stage of super-aging. Day.